Let's talk more about crude oil with Ashley Petersen, Senior Oil Market Analyst at Stratas Advisors. Ashley, thanks for joining us. Break it down for what does this type of tension with Iran mean for the oil majors, the likes of an Exxon or even a Chevron?
It's good news for the producers, the pure play producers. If you're an integrated major, you're going to see a little bit less upside because while prices for crude are going up, refinery margins are certainly being squeezed in this higher price environment.
What about OPEC? How does this sort of change the equation for OPEC and possible cuts there?
It actually makes OPEC's life a little bit harder right now because when you look at the longer term balances, they really need to keep this supply deal in place. And they know that. They know markets aren't short enough yet to actually bring that production back. But now they're heading into a meeting where several members of the agreement want to stop cutting production. Prices are a little bit higher, although that's because of geopolitics primarily. And they have to convince members to sort of hold the line, continue to keep those volumes in the ground.
I remember the last time you were here, we talked $100 oil. And I think you maybe put a 15% chance of that happening. What is it now, given all the tension since?
I'm still going to keep it there, actually. We've seen these escalating tensions, but we have seen a surprising amount of restraint given the leadership on both sides. I definitely think we're going to see a little bit more disruptions throughout the summer, but hopefully it stays more a war of words than anything else.
Do you think that Iran could actually completely shut down the Strait of Hormuz, and what would the impact be?
So they haven't officially confirmed that Iran did any of the disruptions so far, any of the attacks. But yeah, anyone could theoretically shut the strait. It's a very thin, narrow waterway. So you could pretty easily blockade it, whether that be with mines or a sunken tanker or any sort of arsenal like that. They could do it, and that would have a really detrimental impact, but they'd also be shutting off their own exports.
Right.
They don't have a lot going out, so why would they stop what little they are managing to get on the water into paying customers?
Now, when it comes to the oil majors, are there operations at risk from this?
For kind of the U.S. and the European-based guys, not so much. When it comes to them, you really want to watch hotspots like Libya and Nigeria. That tends to affect Eni, Shell. A lot of them, and this is why, have been investing heavily in the U.S. They've been investing in the Gulf of Mexico, even in Mexico and Brazil, because of the government stability there. That's why they make these investments, and that's why those governments can charge a little bit more aggressively on the oil tax revenues as well, because they can promise you stability of operations.
This morning we've got this big refinery fire in Philly. What's the impact there to prices? Do we not know yet? These are pictures of that refinery fire right now.
It's most likely going to raise gasoline prices on the East Coast, especially in the New York, Philly region. We don't have a lot of gasoline production capacity in the East Coast. We rely heavily on imports from Texas and Louisiana via the Colonial Pipeline. This was one of the few refineries that did make gasoline and jet fuel, so those prices could see a spike. There are volumes in storage, though. We're well supplied on products, so it's a bit of a temporary dislocation, and hopefully once the drama of the fire is out, it should actually be a fairly quick repair.
That's good. What about the strategic petroleum reserves? What are the chances we tap those?
If the strait gets closed or clogged to a significant degree, pretty high. And we have more than enough in them. I mean, remember, Congress has been trying to sell them off because we're well above our required 90-day import limit. We have to keep 90 days worth of imports on hand, and we're well past that because we've had such strong U.S. production and we have high product stocks being held privately as well. So chances are pretty good we could tap that, but we're actually not the ones being hurt by these activities in the Strait of Hormuz. I mean, we've really downplayed our imports internationally. It's actually, European and Asian allies who would be more impacted, in which case you'd see a coordinated international release. That's why the IEA primarily exists on the oil side, is to coordinate these releases and provide stability and necessary products so that cities aren't going dark just because we have this disruption.